Hello and welcome to BQ Prime. A very good morning to all the viewers. I'm Hiral Tatia. Clearly, if you go to see in terms of where markets are concerned, the somber trade does continue, but we are hovering pretty much at those 19,400 levels. With regards to Bank Nifty as well, we've tried to maintain above those 45,000 levels, but clearly the breath is skewed towards the advances in today's session as well, and that is giving you some bit of strength overall. But clearly, towards expiry, that wobbliness is expected to continue as well because clearly Nifty has been stuck between its 20 to 50 EMA, and clearly it's the financial Nifty expiry that will be in focus from here on as well. Overall, there has been no return from Nifty since the 5th of July as it remains stuck post the initial moves that it saw as well. Clearly, now the earnings season is also behind us. At the same time, there is no major economic data that is lined up in the near term, and that is the reason why we are going to see some bit of consolidation and Nifty remain in that broad range as well. Clearly, analysts have been talking about 19,200 to 19,700 kind of a range that Nifty could hover around so far. Moving on, sectorally, metals and IT emerged as the top gainers, while media as well as the PSU emerged as the top losers. In today's session as well, if you talk about few of the names, HDFC Life, in fact, in life insurance companies, SBI Life, Assurance, all of these are seeing some smart moves in today's session. And you have a Jio Financial Services that is locked in lower circuit for a second consecutive session. Joining us on the show to discuss stock-specific action today is Ashish Maheshwari, Director at Blue Ocean Strategic Advisors. Ashish, good morning and welcome to the show.
Morning to you also.
Ashish, let's start with the Jio Financial Services. Second consecutive session after listing that the stock is locked in lower circuit. What's your view overall? Clearly because it seems, and overall, there are more sellers as compared to buyers on the street in the last two sessions as well. What is it that you're picking up? Is it because it's capital without business and it cannot command such a high premium? And there is a rush to exit the stock, which is actually suggesting that there is limited scope in store in the short term and it will only give returns over the long term. So it is probably an investment from a really long term perspective. And from what price levels do you think that a buying could actually emerge on a counter like this?
You have mentioned so many points, and they are all relevant points as far as Jio Financial Services is concerned. I'll also brief a few new points also. One is that as is not part of, is not going to remain part of Nifty and BSE 30 indices. So some selling is coming from those funds, which are the passive funds, and I'm expecting in between yesterday and the next few days, approximately 14-15 crore shares will be sold by of Jio Financial Services. So this is one trigger. Second, if you see approximately 10 crore shares are still in seller window, then there is no buyer for this stock. So it shows that everybody just want to come out of the stock, and people have bought this Reliance Industry share in anticipation that this will be listed somewhere between 350 to 375 also. But as stock has not moved at those levels, so we are witnessing some sell off in the stock. I'm expecting this will drift below 200 rupees because fundamental, say, if you see fundamentally also, uh, typically they own 6% of Reliance. This is the reason they are having so much net worth at that particular price point. But business wise, it will take time to build that business. And this is the reason we are witnessing a lot of selling coming in the counter and will continue in my view. So I'm expecting the stock will go below 200 at that price point. Maybe I'll surely look at it for a longer term, but not below 200, not above 200 for sure.
Right. So my next question coming to you is, we know there are no buyers in terms of JFS. However, someone who's already been a beneficiary in terms of the 1:1 on the demerger, what and is holding a JFS, would you advise them to sell at current levels or stay invested?
This is the reason the stampede is there in this stock. That those who are holding this stock and they've got it at free of cost, and there's a reason they are selling this stock at booking gains. So in my view, this momentum will continue because there's not too much appetite in the market to buy this for a longer run because there are so many other stocks which are available at much lower market cap than Jio Financial Services. And Jio Financial Services is a really long-term story because they have to build this business from the scratch, and it will take time because there's quite competitive market. They have to compete with the HDFCs and Bajaj of the world, where they are represented in all the nook and corner of country now. So it's not that cakewalk that they will pass through easily. So they are having all the infrastructure and setup, but things takes time, and market is cognizant to that, and there's the reason a lot of selling we are witnessing, and will continue.
Right. So that's with regards to Jio Financial Services. Moving on, some good traction in the last 2 to 3 trading sessions in terms of Adani Enterprises as well as Adani Ports. What's your view on both these names?
Yes, in fact, in Adani Enterprises, promoters have increased their stake, which gives a lot of comfort that at 68% their stake also they want to make it to 70 or even further they will increase their stake and putting so much fresh capital in the company, which is positive. Along with this, if we see even the shareholding pattern, DIs are not seller in last 6 to 9 months. FIs have increased their stake, courtesy GQG partner from 16 to 20%. So hardly public float is now 5 to 6% left in Adani Enterprises, and this will keep the stock movement in momentum. So in my view, this is a stock which if anybody has bought, they can continue to remain invested. Along with Adani Port, also fundamentally this company is doing very good. I'm expecting this year they will do approximately 380, 90 million metric ton of cargo handling, which will give you around 25,000 crore top line, and profitability wise also robust profitability numbers will come this year. So Adani Port is stock which I can also touch and port is at mark in next 3 to 6 months time. I'm bullish on Adani Port as
Right. Let's talk about Patel Engineering. Now, they've emerged as one of the lowest bidders in the project in MP. What's your view on Patel Engineering from an execution perspective as well? And what would you advise investors to do?
As far as Patel Engineering is concerned, again, a turnaround story into infrastructure segment. Companies now doing very well, have almost 20,000 crore worth of order book in hand. Last year only they won 7,700 crore worth of order. And one beauty of this company is that 60% exposure is into dam and hydro power related sector, where there are not too many players venturing and it's not that competitive, but at the same time margins are high. So I'm expecting they will do 15 to 17% kind of EBITDA margin going forward also. And this is a company surely to watch in longer run, Patel Engineering.
Right. Moving on from the hotel space again, there's a lot of positivity floating around that hotel companies are expected to do well in FY24 as well. Lemon Tree Hotels has signed a couple of deals recently. How are you looking at a Lemon Tree Hotels, and what would your view be on a Lemon Tree vis-a-vis the other listed companies?
Yeah, Lemon Tree is again into my buying radar. In my view, this is a stock where the like profitability maybe 75 to 80 to 100% it can grow in next 3 years. Because again, the reason is the kind of traction which is developing in domestic hotel industry because of COVID, not too many people have traveled, and after COVID, there's a lot of inclination among masses to travel, and uh, the way purchasing power is going up, people are easily able to afford now 6,000 to 10,000 rupees per night room in the B and C grade towns also. So Lemon Tree, if you see, they are major fortes into tourist destination and B type of cities where a lot of events are happening and a lot of tourism is coming. So like how they have tied up with Kasoli and one in Odisha, two properties. They're continuously signing newer properties. So in my view, this is again a good stock to watch. 10 rupee paid up stock available at 105 rupees. You can't go wrong, and hotel industry, in my view, will continue to grow by at least 50 to 20% CGR in the next few years. So Lemon Tree is in my buying data for sure.
Right, that's with regards to where Lemon Tree Hotels goes. Moving on, Brigade Enterprises is in focus as well, and this is on the back of the Chennai land deal for a residential project that has been signed. The stock did see some moves in today's session. How are you looking at Brigade Enterprises? Because clearly, with a lot of conversations that I've had with analysts, there is a clear, you know, drift towards south-based real estate players as compared to the pan-India ones. How are you looking at it?
Yeah, I agree. South-based real estate companies will continue to do well because the kind of residential demand and IT park related demand has come up in the system, which was not there during the COVID period. So a lot of interest is there among people to buy quality properties and as well as new projects because people want to shift from 2 BHK to 3 BHK from rental to their first buy house and they are earning good salaries. And typically, Southern India, if you see Hyderabad, Chennai, Bangalore kind of market, they are more dominated by IT population. And as people are not going on site, so most of the IT and technical people are working from India only. And this has triggered good demand for middle and high-end residential projects. So Brigade is also not exception. They are having around 1.5 million square feet for sale readily available, and another 8 million square feet will come in next 12 months, which will be generating very good revenue for them. The stock is already at 52-week high, which shows investor confidence, but in my view, still this can be bought for longer.
Right. Moving on, let's look at APL Apollo Tubes. That's an interesting one to focus on as well in today's session because if you see the stock is seeing some smart moves in today's session, and this is on the back of a couple of comments that we've been hearing with regards to the railway station modernization. Now, clearly, these are updates that did come in earlier with regards to 1,300 railway stations that will be updated. But when the minister visited Gwalior, that's what they discussed as well. What's your view on APL Apollo Tubes?
So railway or no railway, I think APL Apollo will continue to do well, and the kind of
Hmm.
capex this company is putting in the system is quite encouraging. They are having a capacity of 3 million ton of pipes already, and the 4,500 crore worth of capex they have done in, and this will be in like we can see result in FY25 where their capacity will be around 5 billion ton, and by FY30 they are talking of even achieving 10 million ton capacity. So this is something quite encouraging as far as the APL Apollo is concerned. Even this year, I'm expecting their one of the highest ever profit numbers. I'm expecting at least 800 crore they will make against 640 crore what they did previous year. So this will be again a stock to watch. So stock is at again at 52-week high, but in my view, institutions are grabbing those stocks which are having good demand visibility at the same time good management and good product. So pricing is relevant for them. I think sustainability is more important than growth. So this is the reason APL Apollo is again a good buy.
Right. And very lastly, Welspun India is another stock that we are watching out for. They've bought 50% stake in Michigan Engineers for around 137 crores. How are you looking at Welspun? The stock did hit a 52-week high, surged little over 5% in trade today.
Yes. Usually, most of the stock we are discussing today are near 52-week high or that hit 52-week high. But there's a reason because in like in bull market, like in this time when there is any positive development, people are not touching any penny stock and they are buying quality stock. So again, Welspun is a good story as far as exports is concerned. They are uh, bed linen and home linen related business are almost running at 100% capacity. And there's very good export demand for Indian companies because people are shying from ordering from China and most of the orders are coming to Indian market. And we have seen in Welspun their Q1 numbers were very good. EBITDA margin went up by almost six are down 650 basis points, which is quite positive. And in my view, this company will do well. My target for this stock is around 1050 in next 6 months. And overall textile sector also looks good.
Right. So that's with regards to Welspun India. Thank you, Ashish, so much for joining us on the show and sharing the views. And clearly, I mean, it is a day of stock-specific action that we have been witnessing. And as Ashish was mentioning as well, a lot of stocks that we've discussed today are either nearing their 52-week high or are at 52-week high. And that's clearly telling you how big that market is in terms of being stock-specific. Because in spite of these kind of moves, you're not seeing a major movement that's happening in terms of benchmark indices as well. They are far away from their 52-week highs. But overall, that underlying positive tone continues, and we're still hovering around those 19,400 levels in terms of Nifty 50. That's all that we have on this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to BQ Prime.